What is up, guys? Welcome to a new YouTube video, and in this video I'm going to show you this simple rule that turned me profitable and increased my win rate significantly. So the rule is very simple. I'm going to go ahead and tell you guys straight away. It's do not trade in a range, and I'm going to tell you what this means, time frames, like what time frames it depends on, and chart examples. So let's go ahead and get started. So a range is basically when price is between two zones. So instead of displacing bullish or displacing bearish like this, price is basically just ranging. So it's chopping around. It's not showing any clear displacement towards the drawn liquidity, right? So when you see price like this ranging in a box, that is when you know that price is ranging in a range. So for example, in the chart we can see right now we're in the 1 hour time frame, so we can see that here is a perfect example of a range, right? No clear displacement compared to here. So you can see, for example, here we moved 1000 ticks, 1000 points, and here we moved 200 points, right? So it's simple to see on the chart, but it's not that simple to stay away as a beginner, because you have to understand that whenever we're ranging, it's very hard to take a trade and that it goes straight to our TP, because before going to your TP, if it does, instead of going directly to your TP, it's going to just chop around, and it's very easy to like get stopped out before going for TP. So the most important thing is to avoid those days, the days that we're ranging, and to avoid losses. Because for example, one single mistake a week, it can literally change you from being unprofitable to profitable. Let's say in a month you take, let's say, 1W. I'm gonna do it like this. Let's say 1W, so a win, 1W, 1W, one loss, and then you take a loss that was a mistake, that was a trade you shouldn't have taken. Sorry. So a loss you shouldn't have taken. So I'm gonna say another L. So instead of having 3 wins and 1 L, which is profitable, you had 3 wins, 2 L's. Okay, you won't understand what I mean right now, but you'll see at the end. So let's say that's week 1. Week 2, you take 1 win, 1 loss, another loss, and let's say a mistake. So a trade you shouldn't have taken, either for psychology, for a choppy market, trading with bad conditions, all of that. And now 1 win, let's say you're in a bit of a win streak, 1 win, loss, win, and a mistake. Again, every time is 1 mistake per week. This is week 1, week 2, week 3. And now we're gonna have the last week, let's say 1 loss, 1 win, 1 loss, 1 mistake. So week 1, week 2, week 3, week 4. Without mistakes, it would have been win, 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 loss, loss, win, loss, win, lose, loss, win, loss, without mistakes. But as you can see, we had 1 mistake at the end each week. So 4 mistakes, 4 SOs, so 4 losses. So what this would do is, let's count how many wins we'd have. So week 1, 1, 2, 3, 4, 5, 6, 7, 8. So we'd have 8 wins and losses without mistakes. 1, 2, 3, 4, 5, 6. 6 losses. So 8 wins, 6 losses. Let's say you have a 1 to 1.5 RR. This would be profitable. You'd still be slightly over break even. You'd still make money, right? Or let's say you have a 1 to 2, you'd still make money. Now, we have 4 losses because one week you're not focused, you make a mistake. Next week you do the same, etc. One single day each week. One day per week. So 4 times a month. You make a mistake. To those 6 losses, that's 10 losses. Let's say with a 1-to-1 risk to reward, 8 wins to 6 losses is still profitable. It's not the best, but it's still profitable. Now, if we add the losses each week, that becomes 10 losses. So now you become unprofitable. And that's a quick example. I didn't calculate it, I just did it like quickly. But imagine you have a bit more win rate, so it's 8 and let's say 4. So imagine you have 8 wins and 4 losses in a month. So out of 12 trades in a month, you have 8 wins. To those 4 losses, that would still be profitable. Now, if we add 1 mistake each week, it would be 4 wins, 8 losses. So it would be break even. So that's what I want you to understand, that every week that you're not fully focused every day, you can ruin your month just like that. So you really have to try to stay focused every single day, every time you go into the market. Make sure you remember this, and you don't say, oh, it's just one loss, because those losses add up really quickly. So what I'm trying to say here is you should avoid losses. And how do we avoid losses apart from technical analysis, bad setups? We do it in the other way, with not trading in a range, not trading when it's choppy. And I'm going to give some more examples. So very, very good example is to not trade until we have clear drawn liquidity on the high time frame. With my strategy, I like to trade when the high time frame is very clear. Today, coming into the day, I took a win. We're the 13th of March. I took a win towards this drawn liquidity. Now, this drawn liquidity is a 1 hour unmitigated and 50-minute equal highs, as you can see right here. Right here. So for me, it was very clear we were going towards that drawn liquidity. Here we were bouncing off a 4-hour gap. Bouncing off the 4-hour gap, we respected it, and we were going towards that drawn liquidity. Went on the lower time frame, looked for an entry, etc. The point of this video is not a trade recap, but just telling you guys. When I came into the market today, I quickly understood where the high time frame was going. So I could go on the lower time frame and look for an entry towards that high time frame drawn liquidity. And those are the trades I like to trade, because those days are high probability for me. But apart from a good high time frame drawn liquidity, what we need is displacement on the low time frame, and it can't be choppy. For example, if we go on the low time frame, so low time frame is going to be 1 to 5 minutes, and high time frame I'd like to say is 15 minutes and higher. So let's go on the lower time frame. This is decent displacement, price. I'm pretty sure it was going to a 1 hour mitigated. Yeah, this one. So as you can see, price was going to this 1 hour mitigated, and if we go on the lower time frame, it was quite clear, right? Displacement, retracement, everything. It was moving well. Here again, this is actually the trade I caught. As you can see, it's displacing, and my draw liquidity was here, which was the one I just said here, which is where I took my TP. So, and we were bouncing off a one hour fair value gap right here. But anyway, like I said, this is not a trade recap. So anyway, what I'm trying to say here is you have to understand when the low time frame is also displacement and not displacing and not choppy. Here is also a range, right? Just on the lower time frame. Here is displacement. Here's displacement. Here is also a range. So I want you to understand when price is not moving properly, it's not displacement towards a drawn liquidity, and it's moving with no intent, those are the days you have to avoid trading. And that is the most important thing. That is what turned me profitable, because now every day that I go into the market, New York open, I look for my drawn liquidity, I see where the high time frame is going. If it's not clear, I'm just closing the charts and I'm not trading that day, because you can very easily lose when price is not moving properly and when it's just ranging, chopping, etc. So to finish off this video, what you need to focus on is avoiding losses and learning how to read high time frame draw liquidity, knowing where the high time frame is going to go, because with that you can scale down to the lower time frame and look for an entry. And obviously not trade when it's choppy. And that's pretty much it. That's it. That's gonna increase your win rate, and your psychology is gonna become a lot better, because you're not gonna be looking for a trade every day. There won't be a trade every day of the month if you prioritize A plus high quality setups. So that's it for the video, and let me know in the comments if you want any type of videos, like how to read high time frame draws for liquidity, how to take a safe entry, how to place your stop loss, anything. Make sure you tell me down in the comments, and I'm gonna be making YouTube videos.